Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TE Connectivity PLC quarterly report. TE Connectivity PLC offers a wide range of businesses and services across various industries. The company's product portfolio includes connectivity solutions such as antennas, cable assemblies, connectors, fiber optics, heat shrink tubing, sensors, switches, terminals, wires, and wire protection management solutions. In addition to its products, TE Connectivity also provides various services including training programs, 3D printing for production, backshells prototyping, electrical installation training, hardware software, machine tooling service and repair, medical device design services, microfluidic devices, and sensor manufacturing services. The company also conducts webinars on automotive topics. TE Connectivity serves a diverse range of industries including aerospace, appliances, automation and control, automotive, autosport, commercial and industrial vehicles, connected home, data centers, and artificial intelligence. Defense and military, energy solutions, e-mobility, industrial machinery, intelligent buildings, IoT connectivity, medical technologies, oil and gas/marine, personal electronics and wearable technology, rail, sensor applications, space, and others. The significant increase in TE Connectivity PLC's stock price over the past year can be attributed to a combination of factors. The company's expanding artificial intelligence, AI-related industrial business has been a primary driver, contributing significantly to organic sales growth. This is evident from its impressive financial performance, with net sales increasing by 22% on a reported basis and GAAP diluted earnings per share surging by 45%. TE Connectivity's strategic acquisitions and investments have also fueled growth, particularly within its automotive sector. The acquisition of Richards Manufacturing has further bolstered the company's growth and market position, especially in electric grid exposure. Additionally, several financial institutions have upgraded their ratings and raised price targets for TE Connectivity, citing expanding exposure to AI/data centers and an accelerated electric grid profile. The market has also re-rated the stock's valuation, with shares now trading at 22 times earnings, reflecting heightened investor expectations due to its strong performance and growth prospects. Analysts project a 24.8% EPS growth for the current year, further supporting the upward trend in the company's stock price. Overall, TE Connectivity's strong business momentum, strategic growth areas, and positive analyst sentiment have contributed to its significant stock price increase over the past year. TE Connectivity PLC market capitalization of $66 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that TE Connectivity PLC holds a significant advantage in their industry. TE Connectivity PLC trades at a higher price-to-earnings ratio of 32 times and a higher price-to-book ratio of 5.1 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. The company maintains a moderate leverage profile, with liabilities making up 49% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth for the company can be attributed to several key areas. The Industrial Solutions segment saw a significant increase of 38% in revenue, growing by $609 million from 2024 to 2025. This was closely followed by the Transportation Solutions segment, which experienced an 8% increase in revenue, amounting to $145 million. Geographically, the Asia-Pacific region played a crucial role in driving revenue growth, with both the industrial and transportation solutions segments witnessing substantial increases. In addition to these factors, the company's acquisitions also contributed to its revenue growth. The acquisition of Richards Manufacturing Co., for instance, added $107 million in net sales. Furthermore, the company's organic net sales growth stood at 15%, indicating a steady increase in revenue from existing operations. Another notable area of growth was the Digital Data Network segment, which experienced a remarkable 72% growth, rising from $413 million to $707 million. On the other hand, the primary drivers of revenue decline are less clear-cut. While restructuring and other charges, net increased by $40 million, 400% growth. This factor alone does not seem to be the sole contributor to the decline in revenue. Similarly, interest expense also saw a significant increase of 400%, growing from $6 million to $30 million. However, without further information on the specific impact of these factors on revenue, it is difficult to pinpoint them as the primary drivers of revenue decline. The net income of a company underwent significant fluctuations between 2024 and 2025. Initially, it increased by 42% from $528 million in 2024 to $750 million in 2025 due to various factors such as higher volume and improved manufacturing productivity. However, the trend reversed in Cone 2026, with net income decreasing by $46 million. The company's profit margins also experienced changes during this period. The gross margin increased by 28% from $1,360 million to $1,739 million, while operating margin rose from 19.9% to 20.3%. These improvements were largely due to higher volume and improved manufacturing productivity. Additionally, the comprehensive income attributable to TE Connectivity plc contributed significantly to the increase in profit margins. The reasons behind these changes are multifaceted. Higher volume was a key driver of growth, as seen in the increased net income and profit margins. Improved manufacturing productivity also played a crucial role in boosting profitability. The company's ability to adapt to changing market conditions and optimize its operations contributed to its financial success during this period. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from the past 2 years and the current fiscal year shows that the company has been able to generate significant amounts of cash from its operations. In both December 2024 and December 2025, the net cash provided by operating activities was substantial, with $878 million and $865 million respectively. This trend continues into fiscal 2026, where the company again generated $865 million in net cash from operating activities. These figures demonstrate a stable and positive operating cash flow for the company. The company's debt level and interest expenses have undergone significant changes. An examination of the data reveals that while the total liabilities increased slightly from $12,351 in 2024 to $12,416 in 2025, the total debt at the end of 2025 was significantly higher than the previous year, standing at $5,708 million. A more pronounced change is observed in the company's interest expenses. The data shows a substantial increase from -$6 million in 2024 to -$30 million in 2025, indicating a significant rise in the costs associated with servicing debt. Furthermore, the trend continued into fiscal 2026, with an additional increase of $24 million in the first quarter compared to the same period in 2025. The overall picture suggests that the company's financial situation has become more burdensome due to increased debt levels and higher interest expenses. The performance of various segments and regions in the industry has shown significant growth. In terms of segments, both industrial solutions and transportation solutions have performed well. Within the transportation solutions segment, all 3 subsegments automotive, commercial transportation, and sensors experienced growth. In particular, the automotive segment saw a notable increase from $1,722 million to $1,885 million. The commercial transportation segment also grew from $312 million to $370 million. Meanwhile, the sensors segment showed a slight growth from $209 million to $212 million. The industrial solutions segment has been another standout performer, with all four subsegments experiencing significant growth. The digital data network segment saw an impressive increase from $413 million to $707 million. The automation and connected living segment grew from $479 million to $549 million. The aerospace, defense, and marine segment also experienced growth from $334 million to $381 million. Lastly, the energy segment showed substantial growth from $216 million to $406 million. In terms of regions, the Asia-Pacific region's transportation solutions segment has been a notable performer, growing from $1,097 million to $1,245 million. Similarly, the EMEA region's industrial solutions segment saw significant growth from $509 million to $645 million. Overall, these results indicate that both segments and regions have shown strong performance in the industry. Management is optimistic about the company's outlook, citing several key initiatives that will drive growth and efficiency. The restructuring program, aimed at optimizing manufacturing footprint, is expected to be completed by the end of fiscal 2028, with total charges of approximately $100 million in fiscal 2026. In terms of sales growth, management expects net sales to reach around $4.7 billion in Q2 2026, a significant increase from $4.1 billion in Q2 2025. Additionally, diluted earnings per share are expected to be approximately $2.26 per share in Q2 2026. The company is also investing heavily in strategic assets, with plans to purchase large quantities of copper, gold, silver, and palladium in fiscal 2026. Capital spending levels are expected to remain around 6% of net sales, indicating a commitment to growth while maintaining financial discipline. Management believes the company has sufficient financial resources and liquidity to meet ongoing working capital needs and may use excess cash to acquire strategic businesses or product lines, reduce debt, or return cash to shareholders. This suggests that the company is well-positioned for future growth and success. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out significant amounts to its shareholders over the past 2 years. For instance, in 2025, it paid out $209 million in ordinary share dividends, while in 2024, this figure was $189 million. In addition to dividend payments, the company has also been actively buying back shares from the market. In 2025, it repurchased a total of $405 million worth of ordinary shares, while in 2024, this figure stood at $303 million. The company's share buyback program is designed to return cash to shareholders through purchases of its own ordinary shares. Overall, the company's commitment to returning value to its shareholders is evident from both its dividend payments and share buybacks. This suggests that the company is confident in its financial position and is willing to use its resources to reward its investors. That concludes the financial summary for TE Connectivity plc. Feel free to comment below, and I will be happy to answer them when possible.